Good afternoon. You're watching the Business Today show, the market closing action with me, Sakshi, Patra, and we're here to get you everything that you need to know about the closing half an hour on the day street. First up, let's take a look at what's hot in the corporate and the financial world. Benchmark indices Nifty and the Sensex trade sharply lower in today's trading sessions, extending losses amid heavy selling pressure. The Nifty has plunged over 300 points, while the Sensex has cracked nearly 1,200 points in trade. The decline has largely been led by sharp cuts in the IT and the auto stocks, with the IT pack now tumbling over 5% as persistent AI-related concerns continue to weigh on investor sentiment. Investors have lost about 6 lakh crore rupees in the session today. Textile stocks deep into the red after the government has slashed the export benefits. DGFT has notified a 50% cut in remission of duties and taxes on exported product scheme. Exporters also say that it could lead to a 1 to 2% surge in costs and could also magnify the impact of higher US tariffs. The tariff double whammy for Donald Trump continues after the US Supreme Court has said his reciprocal tariffs were illegal. Corporates now seek refund. Global logistics giant Fedex is the first one to file a lawsuit into the US Court of International Trade for a refund. Names US Customs and Border Protection and the US of America as defendants in the lawsuit. Prime Minister's office is likely to decide on a proposal which could rob electric vehicles of the zero-emission tag under the new norms. The new rules will include power consumption for charging the vehicle in the emission numbers. Any modification in the norms could also hit manufacturers and their portfolio planning. Salary hikes are likely to be better this year than the last. The annual Aon survey has put the average increments in 2026 at 9.1%, with the real estate, infra, NBFC sectors leading the list. Chemicals and technology consulting industries will be the laggards. Straight away, looking at how the markets are trading in the last 21 minutes of trade, the Nifty is continuing to hover about 1% lower. Viewers, we are at 25,414. So for a small part of the session today, it did slip below that mark, but we are now holding on to that mark of 25,400 at least for now. It's the Nifty bank that has also now slipped lower. Remember, for the large part of the session, it was hovering on 0.5, 0.6% lower in trade, but now it's down by nearly half a percent. It's the India Wix that's up by 1%, and that's leading to a lot of volatility. Of course, it's the IT stocks that continue to face the pressure. Right now, down by 4.88%. There's slight buying at the absolute low level on the IT stocks as well. Real estate is also down by about 2%. You can see even the media stocks, infra stocks, and even the broader markets, mid and small caps, are losing in trade today. But it's the metal stocks that are outperforming, bucking the trend in an otherwise weak setup. The oil and gas stocks that held on since the morning trade are hovering about higher by about 0.4%. Looking at PSU banks and pharma, the FMCG stocks also that have garnered some strength towards the end of the session today. On the gaining front, you have NTPC as the top winner on the Nifty today, followed by Coal India, JSW Steel, Titan and Hindalco. So a lot of these metal power related names that are hovering higher. And of course, on the downside, you have all the IT names, Infosys, TCS, HCL Tech, all of them down in trade. Along with this, it's also Eternal that's down by over 5%, and Trent also among the losers today. But let's welcome our guest on board. Mr. Ashu Madan, the MD for JM Financial, is with us. Warm welcome to you, Ashuji. Good to have you with us as always. Give us an understanding of how are you reading through the rout in the IT stocks, particularly that's really dented the overall investor sentiment back home. It all started with Anthropic about 2 weeks back, and continued updates from Anthropic are hurting the sentiments across IT space, not just in the domestic markets, but even on Wall Street. We've seen what happened overnight. And today, the whole day, we've been looking at panic selling there. So what would you say here?
I think the best case is Sakshi stay away from IT stocks still. I mean, a trader can still look for some bounce back and look for some maybe a small opportunity here and there. But other than that, I think it's just because they have corrected a lot does not mean that they are a good bias at this point in time. Absolutely not. And you were getting some kind of I mean, in last 1.5 years, 5-6 quarters, they were not doing well. I mean, they were making lower lows, lower highs, and finally this accident. So I think just because this sector is in a limelight and because it has taken a lot of beating, not necessary that we have to go to this sector. I mean, this has gone bad right now. I mean, end of the day, after a couple of weeks or couple of months, one may come out with the fact that maybe somebody would have stuck their neck out and bought these stocks at this level and are making some returns. But I think there are so many necks who are already deep into it and losing a lot of money. And probably if you look at majority of Sakshi, the IT stocks are large caps. They are frontline stocks. I mean, there are very few mid caps, and they are leading funds are holding these stocks. So look at the, plight of the people who are already holding these stocks directly, indirectly.
Yeah.
So I don't think so. There is no point entering into stocks at this level.
No point in entering into IT stocks or thinking that one could really bottom fish at this point in time. It's better to stay, away at this point in time, is what Mr. Madan's clear viewpoint is. There is a lot of disruption at hand, and the world is recognizing it, and therefore the pain to let the dust settle and only then take a call right there. But which are your safe bets at this point in time, Mr. Madan? What's happening with the overall markets is that despite, some good news that came in on the tariff front, again, there is a lot of confusion back and forth happening again. And therefore, the markets are confused again as to whether we are on the good side of the Trump tariff deal or not as yet. So how would you look at that broad aspect and look at the markets then?
Sakshi, if you look at the broader market, I mean, okay, if you say a particular stock and sector, I mean, it's very difficult to say, but at the end of the day, I keep sticking my neck out and say that led by PSU banks, SBI, that's the only thing which I like recently, which we have discussed multiple times during last couple of months. But other than that, Sakshi, nobody is ready to accept and believe that India has become a trading market. 25,000 to 26,300. That's the range. It will keep playing that range. Tariff coming, tariff not coming, tariff going, tariff reducing, tariff increasing. Everything is pricing into that. I mean, first of all, Sakshi, I mean, it's been 1.5 years now. I've been saying this same thing, and probably I don't know for how long I have to say. One has to get out of this syndrome of long term. The traditional or the conventional definition of return of a long term was very different, and the next long term or the future long term or the new long term will be very different. One has to align to this reality. Only then they will realize that India is an underperforming market. It's a trading market. One has to become a trader. Now, Sakshi, you tell me how many lakhs of market cap has been eroded in the last couple of days. I mean, it's more than 5 lakhs. 1.5 lakh of annual loss of derivatives. People start playing derivatives because they are quantifiable. That 1.5 lakhs of retailer, 90% retailer have lost money.
Correct.
And 1.5 lakhs and 5 lakhs or 10 lakhs of market cap has eroded.
Single day today, 6 lakh crores.
Yeah,
Single
I
day.
mean, same retailers have lost money, but nobody blames the cash market because the conditioning of our long term is so strong that we don't blame cash market ever for losses. So I think India is a trading market. One should not, I mean, we as a research house, as a broking house, we keep coming up the bets, which are absolutely in short term of nature, weekly expiry, monthly expiry, and that's it. Nothing beyond that. And one should not take a bet beyond that as of now.
Okay, that's a very important aspect that Mr. Madan has shared, viewers. The concept of long-term is truly changing. And in the age that we are in, the kind of scenarios that we are looking at into the market right now, India is becoming a trader's market rather than a long-term market. So one has to be very, very careful with the kind of position one really takes. And of course, one has to keep going back to the financial advisor to really take a view there, because it's not as easy to make money as it was maybe a few years ago into the markets as well. We'll come back to that conversation and of course take more details from Mr. Madan on that. But let's also focus on Coal India, which is also among the top gainers in trade today, viewers. Coal India is now set for the second listing of its subsidiary after the blockbuster success of the first one as well. This one is SECL, Southeastern Coalfields Limited. That is looking to go public in the next few months now. And early in January, we had already seen BCCL, that's Bharat Coking Coal, which had listed in the stock markets at a massive 94% premium. Now, Business Today Television's Aishwarya Patil has spoken to the company about their plans, particularly in the rare earth space when it comes to SECL. So let's listen to an excerpt from that.
Is it close or near or too far to say that you will see robo miners or engineers in the future?
We are
Because we saw a lot of innovation there at AI Summit.
we are planning. We have in talks. This is a conceptual stage. We are in talks with the companies which can provide stage by stage. It will come, which will provide us a dozer equipments, which will be human intervention free, automatic operation.
Already some of your mines are already testing it.
At present, it's not that, but we are in talks, and probably if you come next times, we'll be able.
Which companies are providing these robots? We saw some Adverb and few other companies, even Shell as well.
We are in talks with Caterpillar and similar companies, and within a year, you will be definitely in your.
How many are we going to see, sir?
Initially, we'll start with one. It's a pilot project, and subsequently, we'll enhance as per the requirement.
What's that one revenue target you have post-listing? Because SECL has a huge opportunity and, of course, a responsibility towards the shareholders. What should they be looking out for next year?
Next year, total our profit. One thing we are more concerned about is our profit this year was around 4,500, and next year we are planning to increase it to more than 5,000, and gradually it will increase because we have plans by 2030. Our total production will be around 200, more than 200 million ton, and this way, with the demand and with the total our infrastructure resources available with us, man and machine, the largest equipment, and with the latest technology we are using, we will be improving our efficiency, and definitely all stakeholders will be happy with this.
Most of the PSUs are transitioning into bigger energy companies than just a coal miner as well. So what's the business model going to look like in a couple of years? Because critical minerals is also something everyone's looking at. So feed us.
In the coming years, we are also in talk with the Chhattisgarh government, and with Chhattisgarh government's policy, aggressive policy. In the coming times, we will be opening a few projects, critical mineral projects. Graphite already we have identified. I mean, under auction we have acquired. Coal India has acquired that, and we'll be operating that project. And other minerals also.
Any offshore talks so far?
No, as such not, but it is an initial stage.
All right, so there you heard it from SECL management. The company is gearing up for an IPO. This is the subsidiary of Coal India, the second one that will be going public very soon into the markets as well. Let's go across to Mr. Madan to really understand how should one be really viewing this as an opportunity in the future. Of course, we've already seen what happened with BCCL, and investors who lost out on the opportunity really regretted that 94% listing gain. You rarely find such instances where investors truly make money on the listing day, or nearly doubling their money there. But traditional companies now talking about AI and a lot of robo miners now coming in. What kind of opportunity do you see for both Coal India, BCCL, and now SECL that will be coming in soon?
They are definitely stable, much better than, I mean, all these last few months, they were in the recommended list of most of the people, analysts I have seen, and they have performed well. So I think they'll continue to do well. And Sakshi, I mean, one should realize that gradually you'll come back to the, probably the theme will change back, and for some time the defensive or the traditional themes or the stable themes, the irreplaceable companies will get more value. What has recently happened to tech and to most of the new age companies also, what is happening. So gradually you will realize that the traditional brick and mortar model, I mean, see what the sorry state of affair, Sakshi, is that, I mean, if you ask me, I mean, a company like Steel Authority or BPCL or Musgaon Dock or maybe Cochin Refinery or Coal India, can they be replaced? I mean, can somebody recreate them? It is almost impossible to, I mean, replace these companies. Whereas, I mean, today, if there's Ola, you can make Uber, you can make Rapido, you can come out with Blue. And that is where the value goes. And that is where the people make money, and that is where they go bust also. I mean, today it was Swiggy, then tomorrow it is Eternal, and day after there could be something else also. So these are the companies which are easily replaceable, are thematically the current genre. But end of the day, people make money. And if this, if they're stuck with that, also they'll lose money in those companies also. And the traditional companies, which are, I mean, actually, they're not getting valuations or probably the beta which market should give. So some point of time, this restructuring will happen, and we'll see those companies also getting back in flavor. And probably that's what it will. Let's I mean, jointly we'll wait for this to happen.
Right, you did talk about the new age tech space, and the stocks that come to mind are the likes of Eternal and Swiggy. Eternal today has taken a beating, about 5.5% lower in trade. Volume-led losses can be seen here. Is valuation a key picture here that's emerging yet again, or are there other deeper concerns that one has to be aware of? Because we have seen time and again the stock go back to 300, but again it loses this steam and comes back to the level that it is trading in right now, and it again faces the resistance at higher levels. What is your outlook on names like Zomato?
See, people have to understand, as a company, Zomato, I love that. But as a valuation, I don't. So around 300, nobody can say buy at the lowest and sell at the highest. I mean, last quarterly result, I think it was in December, it touched 360. Yeah. And from 360, when it came down to 310 or 315 or 300 plus levels, I mean, we decided to get out of it. Nobody can, I mean, get the best profit or the best selling price. Since then, I am not recommending Eternal at all. I don't know for how long it can remain low. I don't know to what level it can go down. But 300 plus, I mean, the discipline says that one should book profit and get out of this stock and just watch as a fence sitter or as a spectator. That is the problem, because then once you see, once you make that kind of a money, because a lot of people have entered into a stock at 100 levels, they have made that kind of money, so they get into that comfort level. Unless they get uncomfortable, they'll not be able to sell that, and that is where they miss profit. And the psychology says, whenever, if they've seen a particular price at the top, nobody can sell at the top. You cannot keep waiting that कि नहीं वहां तक तो गया था, एक बार फिर जाएगा कि नहीं. I mean, you should not do. You should look at your profit and get out of it. So around 300, we are out of Eternal, and I'm not positive on this stock as of now.
Okay, so a clear message there for all investors. If you've seen your favorite stock really touch a high and it's now been struggling for a long time to reach that particular point, don't hold on to that mark. Just decide upon the kind of profits that you should be happy with. Get out of it if it is getting stuck really, and if there are valuation issues, like Mr. Madan pointed out in the case of Zomato that he's been finding. We do know that it touched 360, but he took a decision to get out of at 310 odd or so, and probably just now see whether there will be another space when it can further re-rate itself going forward from here. There will be another time that you can probably look at, but don't hold on to your own levels that you want to book your profits at, is a clear message there. Let's shift focus to electric vehicles now. There's a key, special change that one may really be looking at here. Electric vehicles may actually lose their zero emission status now. And this is under the upcoming CAFE 3 norms as well. With the PMO now reviewing the proposal, the debate is over whether EVs should continue to be treated as zero emission vehicles or whether grid-based emissions should be factored into the compliance calculations. And for more on this, now I'm joined by my colleague Chetan Bhutani, who's been tracking this story very closely. Now, this could be a big change, Chetan. EVs, which used to first get subsidies, a lot of government push, a lot of policy-related support, a lot of discounts there at the dealerships as well, to entice more viewers to come out of petrol and diesel ICE vehicles to shift to EVs. Now, if the zero emission tag also goes away, what are the things that one has to really look forward to?
Well, Sakshi, the matter is purely contentious and not a very negative, not a very positive news coming in for the electric vehicle space, especially when we were thinking and expecting that more stops would be pulled out from the government's treasury and given towards electric vehicles. But now the government's logic is also completely right and fine, because what the government is saying that another CAFE 3 norms, which is the corporate average fuel efficiency norm, which goes into effect from 2027, which means stricter emission norms would be calculated. So in this category, the government feels that since electric vehicles now get charged through the main grid, which is also powered by coal, and coal being a polluting agent, one of the biggest polluting agents, of course, does not give a complete, benefit to EVs, because they're getting charged by the main grid instead of a greener energy source that charges the electric vehicle. So the government is now wanting that EV should not be fully treated as a zero tailpipe emission car. It should be treated little bit lesser than the petrol and diesel, but yes, it should be given that face value and that benefit. That means the car companies that used to get bigger advantage of selling EVs and offsetting the emission norms by selling their their ICE vehicles also will not be getting that big of an advantage that used to get earlier. Also, lastly, Sakshi, earlier these companies auto companies used to sell bigger cars in comparison to their EVs, which would actually offset the impact. But now, since the impact would be limited, we'll have to see and watch out what really government does. In fact, the Prime Minister's office has himself intervened and is calling upon the OEMs to understand the matter along with other ministries and stakeholders as well.
Absolutely. This calls for a deeper attention and understanding of how EVs will be looked at from here on. Will they be seen as completely zero emission vehicles, a complete climate friendly, or will there be a caveat there as well? And what will that lead to in terms of OEMs' focus plans on EV expansions? And, of course, a large part of population looking at EVs as an opportunity or their next vehicle purchases as well. So that's something that we'll keep an eye out on as well. Shifting focus to the textile companies. Now, most of the shares of textile companies were down today, and this was after the government slashed the benefits of the schemes for exporters. In an order issued last night, we've seen the government cut benefits for exporters under remission of duties and taxes on exported product scheme for textiles, for gems, jewelry by 50%. This allocation for the scheme was cut in this month's budget to 10,000 crore rupees from 18,200 crore rupees earlier. And according to many analysts, cutting the benefits in this scheme is likely to raise the export cost by up to 2% as well. And that's something that you should be focused on. Let me go across to Mr. Madan now and try and understand on both these aspects, how should one be really looking at first the EV space. Do you see this as a major concern, or will this be just absorbed, as something as part and parcel of the policy regulatory change, and it's not anyway going to be impacting the EV focus that the government has or the consumers also have?
So I think EV alpha is already priced in most of the stocks as far as industry is concerned, Sakshi. So I don't think so. It will be of a much effect. And
okay.
I think even if there will be a marginal effect, that will be absorbed, and I don't think so there could be any negative impact, because thematically, I think the theme is still on and theme is still very fancy, and people are going for it. So end of the day, companies will be able to, adjust to this, effect. So I don't think so there will be any major effect. Second is about textile, you are asking?
Yes, absolutely. The government cutting the benefits.
So textile,
there.
I think today, textile probably today is not just because of this change in numbers. It is also because of the uncertainty again on the tariff front. So how and what will happen? So I think today probably it is too early. So see, textile sector is under pressure. I mean, they are looking for a lot of reductions and a lot of favors right from the government and the global sentiment also, and which is not easy to get. So I would not bank too much on textile stocks. Yes, obviously when they were down and out, and one sign of recovery, there was a very special sign of recovery because of the tariff front. But beyond that, I don't see there's any major thing happening, because once Bangladesh gets settled, it could again be different. There are so many moving parts as far as textile is concerned. So I mean, you cannot find a beggar stories there. So one should simply watch.
Absolutely. Let's shift focus to the market closing now. 25,459 on the Nifty. We're about 1% lower on the Nifty, and that's where we have shut shop at. 253 points of a loss there, although just slightly improved from the day's lowest point. So we have seen some buying happen at the low point of the intraday trade today, but almost 1% loss for the Nifty today. When we look at the Nifty Bank, that was better off, 0.28% of losses there. That also dipped towards the middle of the session today, but improved towards the end as well. And buying was seen both on the Nifty and the Nifty Bank towards the end of the session as well. When we look at the IT index, that's the one where the pain emerged today, and the epicenter of the fall, 4.4% lower at 30,158 today, almost 1,400 points gone today. But this has also seen some improvement from the day's low point. We've also seen some of the other sectors, including the mid and the small caps, that have dragged in trade today. But if you look at the mid caps, they've ended at the day's highest point, even though it's still 0.3% lower. Similarly, for the mid caps small caps as well, that's also lifted from the day's low point, ended about 0.5% lower, giving us some sense that buying may return in case there are sharp losses in trade. But it was the metal index, the oil and gas index that continued to move up. But these are the top gainers on the Nifty. In front of you, you have NTPC, Coal India, IndusInd Bank as among those gainers, almost 2% higher in trade. Look at JSW Steel, Hindalco, even Hero Moto as among those winners in trade. But on the downside, clearly no prizes for guessing. It's all the IT names that have dragged today. Tech Mahindra 6.5% lower. Look at 6% losses on HCL Tech. Zomato, of course, we've seen the valuation concerns that Mr. Madan also talked about, 5% lower. Infosys, TCS, L&T, these are all the stocks that have been dragging in trade today, anywhere between 3.5% to 4% in trade as well. But viewers, let's shift focus to what may interest you in case you are an employee and are looking forward to the salary increments in the upcoming appraisal cycle. Well, salary increments this year could be better than the last one. This is as per the Aon Salary Survey, one of the leading in this field that is forecast a 9.1% average hike across India this year. And this is higher than the 8.9% figure for 2025. Now, employees in real estate, infrastructure and the non-banking finance sectors can actually expect the best raises in their salaries and appraisals this time around. According to the survey, the attrition has also fallen in 2025 and has reverted to the pre-COVID levels as well. The estimates now show a more than 10% hike for at least two sectors, with the auto industry, engineering design and retail sectors following also closely as well. All right, and we'll now shift focus to some queries from our viewers for Mr. Ashu Madan. Riya Sharma from Dehradun has sent the question for you, Mr. Madan, and she asks you, is it the right time to buy physical gold and silver? We have seen, of course, both the precious metals cool off from their highest level, but still there is an inching higher because geopolitical tensions are still ripe.
So, Sakshi, I think we covered a bit of it last time. Lot of money has gone into gold and silver, and any asset class which see this kind of inflows, I mean, goes sideways for a considerable long time. So I think that is the reason. If you look at recent developments also, whenever there is an issue because of Iran war, there was hardly any impact on gold and silver. So, right. Sakshi, I mean, the kind of flows I have noticed, I mean, the retail, the housewives, and people who were never into the market, whichever we have seen the signal, that kind of a signal I've seen the flows into gold and silver ETFs. So somehow I'm wary of investing at these levels. Unless there is a meaningful dip in gold and silver, that is the time to buy. Otherwise, a lot of people are stuck with the positions, and because we have just seen recent highs. Absolutely. And the kind of euphoria and frenzy there was in gold and silver. So my personal advice would be to wait for some time, don't rush.
Wait it out, yes. Next, we have Akash Verma. Yeah, absolutely. Next, we have Akash Verma from Delhi asking you, where should I invest in this volatile market? I think you need an answer to that. A lot of our viewers would have that question for you, Ashuji.
I think, see, the way the sectoral accidents are happening and the way time and now we see, I mean, accidents happening in IDFC and the things, I mean, it is very difficult for a normal person to, to safeguard themselves. So for me, for a retail investor, it is definitely advice would be to buy through ETFs. And the best is probably Nifty or Bank Nifty ETFs if you want to invest in the market. That's where you can be little safe on in terms of global and domestic volatility.
Absolutely. Thanks a lot then, Ashuji, for being with us. Always a pleasure to host you and to seek all those insights on the markets. With that, viewers, it's a wrap on the Business Today show. In case you too have any queries about your investments in mutual funds, in your SIP, stocks or gold-related queries, then send them to us on the number that's flashing on your screens. Many thanks for tuning in. Stay tuned. I'll be getting you all the market opening action tomorrow morning at 9 a.m. Stay tuned for that too.
Presented by National Stock Exchange.